Once a farmer, always a farmer, right? That seems to be true for Randy Dickhut. Now, maybe that's why, even in semi retirement, he is still looking ahead and looking out for those still farming the land. Hi, I'm Dave Price, and this is the American Farmland Owner Podcast. Randy started farming with his family near Quincy, Illinois. Years later, he spent 2 decades at Farmers National Company. These days, he shares his observations and insights as a farmland analyst for Agricultural Economic Insights. We will get into what Randy believes is responsible for what's happened to farmland values so far in 2025 and why he thinks more farmland might hit the market later this year. But first, Randy starts us off with those early days on the farm. Hey, first talk about your background. So you bring farming experience to the overall picture in your overall career. Will you talk about growing up, what that was like and what you were involved in?
Well, I think all of us who grew up on a farm from day one when we were little to playing with farm toys to progressing to walking bean fields and being responsible is a good basis for a lot of things. And so I grew up in the high school in the mid to early 70s, saw the farm boom at that time and the issues and finished college with a degree in accounting and came back to the farm and rented some more acres above what I'd had during high school and college. And then I saw 1980 as my first, 79 was my first full year. So I saw the heart of the farm crisis. There was land that sold, that we farmed, sold out of an estate at 1980 for $3,000 an acre. And a few years later is worth about $1,500 an acre when it was sold again. Goodness. So saw that 50% drop and then farmed all through the 80s and 90s, as anyone who did saw that. You really farmed on the margin, gross income, grain prices, cost, you watched everything so you could have a margin. And, if you look at the long-term trends of farm income data, those were pretty, average to below average years most of the time. And then 2002, I wanted to do something different. I started being a farm manager and real estate agent for Farmers National Company based out of Western Illinois and Northeast Missouri. And did that for about 4 years, went to the home office in Omaha 4 years later and was vice president of client relations. So I worked with landowners, non-operating landowners from 60 acres to 140,000 acres, institutional owner, and everything in between with new clients, with their estate problems, with succession issues and so forth. So that was a very, very good experience to see what goes on in the whole generational transfer of land. And then my last 9 years at Farmers National, before I retired in 2022, I was basically the managing broker, senior vice president of real estate and appraisal, overseeing our couple hundred, licensees and transactions and so forth, selling from 400 some to $760 million of farmland and real estate those years. So in my last almost 3 years now, I've been writing articles and doing farmland trends and so forth for Ag Economic Insights, David Widmer and Brent Gloy, former Purdue ag economist. And so I'm enjoying that as what I call my retirement gig.
And because of that, you're able to look back at things, and I appreciate that you're a pretty young guy in the 70s when things were much better, but you should have memories enough about it so that you can kind of give that broader look at things, where much easier time in the 70s and then the wallop of the 80s.
Yeah. I call it the how we look at things is our based on our frame of reference or our experience. And so, looking at current farmland prices and trends and these run-ups and the, post ethanol boom or coming about, in the earlier 2000s, and land values went up, and then then they plateaued, and now more recently, 2020 or so, they went up steeply again. And so if you look back and you've experienced that farm crisis and that 50% drop in land values, and it took about 20 years for that same farm, same quality of farm that sold for $3,000 in 1980 and $1,400 in 1987. It took it 20 years to get back up to $3,000 an acre, basically. And inflation adjusted, it was a little longer than that. So long slog compared to these jumps right now.
Yeah.
So that frame of reference, I'm going to probably say it makes you a little more conservative on the outlook and trends than somebody who started farming in 2006 or 7 and has experienced some really good profit years, some historically profitable years in commodity ag.
And if you look at that USDA report that just came out the last week or two, and we're talking to you in mid-August, I should point out, but that came out showing it's +4 or so nationally. Yeah, if you're into this game here more recently, you're thinking, man, this is pretty solid here, and it's really probably hard to process what the country experienced in the 80s, those early 80s.
I think it is. Excuse me. There are different concerns right now that, we're not repeating the 1980s, or I hope we don't. It's not good for anybody, landowners or farmers or agribusinesses. But we're seeing some other challenges, I think, and who knows on some of those. But there's always challenges in agriculture. And, there's a reason that there's crop insurance. There's a reason that you build up equity as a farmer and stuff to weather some of those times, because, that recent report was very interesting. The fact that, what we had seen before, and any ag real estate broker saw the land values kind of at the end of 24 were and softened some, just a little, but they seem to pick up again the first part of 25 for, federal support, ad hoc payment, projected some other payments and things. And I think that's part of what made that overall jump in values year over year, was kind of the more recent in 25, which is somewhat hard to explain with the very low commodity prices.
That's too bad to hear, because I wanted you to explain that.
Well, I think it's more so on the supply that's been for sale. Everyone reports, I saw reports, down 25% on the farmland listed for sale in the open market. And that's the supply and demand economics, balance is working there. As there's a little less for supply, that good farm comes up for sale, and that neighboring farmer or so is definitely going to be interested. Might be the once in a lifetime chance to buy it. And I also think there's some investors who always with 1031 exchange money. Ohio's an interesting one, because you saw their land values bump up significantly and approaching in that USDA report what they are in Iowa and Illinois for cropland. And I think part of that, from what I understand, is from all the development around Columbus.
Not for farming.
Not for farming, data centers and expansion. And then there's 1031 exchange by those farmers. I know, guys, in the last 5-6 years, there are farmers looking to buy and move their operations. So that makes a significant, push on land values that kind of filters through some bigger part of the state.
And is that, maybe Ohio's a good example of this. Is that kind of one of these bigger trends that we didn't have to talk about as much in the 80s, where, like, look at that Columbus region there. You've got sales happening, land values are up, and if I can say this, unfortunately, it's not to keep farmland as farmland, it's for other development. So while as a seller, that's going to push your prices up, but big picture for farmland production and long-term hold, it's leaving the family.
It is, that's been going on kind of anywhere around
Sure.
urban area and in crop production. I call it the green belt.
Hmm.
Well, specifically, like when Chicago really grew with the suburbs and stuff, that trend happened in Illinois. So those sellers moved downstate or to another state to buy farmland, and some moved their whole operations, and some didn't have to do that. So that boosted Illinois land prices, I think, at one times where that was in the 70s or earlier, or sometime else, maybe earlier than that. So I think that is part of the trend. That's still a small portion, and where it's affected. So a lot of the grain belt that doesn't have any effect because you're getting too far away, or some other reasons stuff. But it does have some effect. And so when you have that lower supply of land for sale, you've got farmers that want to buy it, even though times aren't as good. There's still a lot of farmer capital or farmer financial ability to borrow to buy that farm because they have better economics to buy it than an investor, long-term uh, plans for their farming operation, et cetera. And some individual investors with 1031 money or other reasons for investing. So a little higher demand, maybe, along with lower supplies. I think that's been part of that support for farmland.
In light of the stronger demand, though, what's your take on why more folks are resistant to sell? Why are they holding on?
Yeah. I think, historically, those that have any understanding of farmland as an investment, look at it that way, will analyze it. And I think, you've always had your generational succession of that non-operating owner families,
Hmm.
passed it down through the generations. So there's usually somebody in that group that wants to preserve the legacy because this was my grandparents' farm or this is my parents' farm.
Hmm.
And they may live close somewhere in that neighborhood in Iowa or Illinois or North Dakota. And so they're still attached, know the farmers. Gets a little farther away. Their family, third, fourth generation are living elsewhere. And there's some still attached to it, and there's others that aren't. But right now, with some uncertainty in the, bond market, stock market, world economy, US economy, there will be those who will say, this is still a safe investment. It kicks off rent, cash, it's secure. Again, if they understand it, you don't have to worry about unpaid rent. You don't really, in most cases, once in a while. It's always going to be rented and it's pretty stable, and you hope for some appreciation. But I think that's why some held on to it, the uncertainty of what it was. And now, what kind of talking with brokers and others that think there'll be a little bit more come on the market because we saw this back in the earlier upright move on price. Those that didn't think they sold at the top, it came back down. Then there was a boost of sales in 2020, 22 in that era because, oh, they're back, prices are back up. I better sell now. So I better grab it now. It didn't sell earlier. So there'll be some additional there. And I think there'll be a little more come on the market from farmers who are in some financial issue problems, who shore up cash flow or balance sheet, work with their lender. They might sell an 80 acres or sell off some unneeded equipment or something. Typically, I don't think there'll be a lot of that, but if you add a few more farms that come up in an area, depending on the area too, that'll add to the supply for sale.
Some of the other insights you've shared in your writing would be the stronger cattle profits. How does that play into it?
Well, in those areas that, pasture land in a lot of the states, according to what I read from reports, up more than cropland, which made sense because
Hmm.
livestock profits in general are, up. The commodity crops are down. So you average together, it looks like farm incomes are, reported and doing well in the aggregate, but the two have diverged. And the cattle profits, take a state like Nebraska, where a lot of operations have are a mixed focus. They have cattle, might have a feedlot operation and they have grain production. And so one's not doing well, but the other's doing better. Or a lot of Nebraska has good irrigated ground, but also you've got dry land pastures in the hills and sandy areas. And so they mix it. And so I think you see those pasture values better. You see, other plain states where the cattle are the focus. And so, there are profits there. And so that naturally supports some land values.
When you were talking about because of financial pressures that maybe some of the producers are feeling, where they're maybe selling around the margins here, in your example, maybe it's 80 acres or some machinery they think they can do without. As you look ahead to the rest of 2025, does that have any overall effect on land values as you look at the overall equation, or will it be such a small amount that it's not significant enough?
That is a good question. With the I look yesterday evening at harvest corn prices for grain elevator. I used to deliver grain to West Central Illinois on the Mississippi River. I think the quote for October is $3.56. So that doesn't put a lot of enthusiasm in farmers, producers' mind and puts a challenge. But land is always a long-term thing, of course, but you have to have the finances to do it. I think we'll know more if this crop really is that size, trade issues. Will there be more government support? We've switched to ad hoc support. I think the grain farmers' cash flow or liquidity is going to be challenged. Whether soybean, corn, wheat farmer prices are not good. So they're going to get maybe something from revenue insurance this fall, depending on their yields. But yields are going to be good, looks like, but still their liquidity. So, the new farm bill payments are not in the farm bill, but we're in that, one big, beautiful bill.
Yeah, we
Those
don't do
payments,
farm bills anymore, apparently.
no, that's right. That's ad hoc money now. But the payment that we'll receive for the 2025 crop isn't until next year. And so the producer still has to struggle with that cash flow. I don't have that extra, we'll say $65 an acre, which is significant in some projections to play with. So I've got to struggle with my cash flow down here until I get this a whole year later. And I've invested in, fertilizer things that still seem high for the 2026 crop. So I think farmers are in general wiser today than they were in the 1980s, where, I can't sell a farm, I can't do that, I can't sell some land. Now, in order to keep the operation going and profitable, I think, some will, I will sell off a piece of land. So the long story is, I think there'll be a segment of that. I don't think it'll overwhelm the market. There's like the 80s or anything.
So as you look at that, potentially, is that more likely if they're doing it that way, where it's a neighboring farmer who will be taking that little slice as opposed to maybe an institutional investor?
It will actually be both. It depends on how they sell it. Most farmers, if they do have to sell it, and farmers have gotten very wise about this. If I want to sell a farm, or I've got a landowner who's wants to sell their farm, or has passed away, and the children are going to sell it. That farmer today, in a lot of cases, is trying to find an investor, whether it's an individual, or they also go to investment funds. They really trying to find someone to buy it so they can still farm it and rent it. So that may not lose acres in that farming operation if they have to sell something, if they can find individual investor or another investor to sell it kind of quietly. But I think there will be some. We're also seeing more retirements, I think, in farming. If you look at the machinery auctions, retirement sales makes sense. Farm through the good times, gets a little tougher. Why let my equity erode? And, I think I will retire. their land usually doesn't come up for sale at that time, but it changes some dynamics of who's renting and who's farming what.
You have family scattered around here, a couple of different states, so you do a little, your family does some traveling as you're out seeing the kids and grandkids and all of that. In light of what you've experienced through your personal side growing up as a kid around Quincy and then professionally through your travels and different stops in that, what's it like for you to drive through the countryside and see how so much of this has changed? So we have a lot of maybe the old school smaller side, those size farms that were a thing when you were a kid. Primarily they're not, unless they're maybe some kind of niche or organic or some, maybe the more hobby, which sounds insulting to call somebody, but you know what I mean, on the smaller side. It's changed so much in those years. What's it like for you to see the different parts of the country and how much things have changed?
It is very interesting. And you're hitting a lot of things there that have transpired. And of course, the peak number of farmers was about 1930 or so, when there were 7 million farms, I guess would be the qualification. Now there's about 1.8 or so million farms. And according to USDA statistics, huge, it is at 86% are small to mid-size or retirement farms, as you mentioned, or part-time, which can be very good farmers, and it's a good
and I hope the
position
way
for
I
them.
phrased
Yeah.
my long question wasn't insulting to all
Yeah.
those folks.
It takes a little bit of all of it. But so there's been a natural, fewer farmers getting larger. It continues, whether you call that the Walmarting of agriculture or what, won't debate whether it's good or bad. But in traveling around, I think the things you see that there are seems like fields are larger. I think, you're not farming the 20 acres anymore like I did growing up. You're taking fences out and you're farming 40 or 80 or 160 altogether. And because of the size equipment, instead of splitting that 160 into 80 and 80 and rotate, you'll probably farm one crop this year and one the next. So you see blocks of corn or soybeans through the Midwest more. Another thing, maybe not in the area, is the expansion of the Corn Belt north, to the Dakota, especially North Dakota. Corn and soybeans, major producer now that didn't used to happen. So that's a little bit different. The other thing I noticed driving through the country is the quality of the corn stands. And of course, you're driving 70 mile an hour on the interstate, but farm kid, you can always tell, what that field looks like, even though you're driving fast. With the seed treatments and technology and fungicides and planter quality and operator quality, there's fence post stands in these fields. And that's, I think, a big part of the yield we get and how productive farmers are. So that's one thing. You see some larger grain operations and stuff, grain handling setups. So it's very interesting, but it takes all types of farmers. It takes the large produce farmers. It takes the small produce farmers that feed the farmers markets and stuff that people love to go to. And it takes the large commodity farmers produce the food and fuel and price of commodities that satisfies the market. So it's a very dynamic industry that takes all and a way to support all, because we're fortunate in this country to be wealthy enough in the whole to be able to buy organic or identity preserved or have corn for fuel and not just for feed and some things like that. So kind of takes all of it and it continues to change and evolve.
I have lived in Iowa the last almost 25 years, grew up in southwestern Illinois. The picture you were painting about driving through, that is one of the coolest, simplest, purest visuals to me when we drive through smaller towns and you see those roadside stands. And I will, full disclosure, I am addicted to Iowa sweet corn and eat it multiple times a day, frequently. But to drive past one of these stands that either has the sweet corn or those big, fresh, juicy tomatoes. And nothing against the tomatoes from the folks who bring those in from Mexico or something, but man, there is nothing like pulling one of those suckers that was just out of the field that morning. But that to me is one of the purest, most wholesome things when you go by one of those stands and it's totally based on the honor system. You go there, get what you want, put your money in there, and without fail, you have to leave a tip, I think, leave more than what it costs because of the honesty involved. And I just think that's one of the coolest experiences from a guy who didn't grow up on a farm. That's probably
Yeah. And that's why it takes all. So I think we actually need to, it's hard work to be a small produce farmer and take it to the farmer's market during the summer or supply a school or a local market like that. That's hard work. Some, to be honest, grain farmers wouldn't want to do that same type of work, and that produce farmer wouldn't want to do the same that the large commodity producer does. So it takes all of it. And I think that's where our program's emphasis support should be, is kind of figuring out how to create all of it so we all have the best food supply, whether it's that fresh, local, or the best we can get in the store. And, we're fortunate to have blueberries all winter long, and yes, we have to import them, but we can enjoy variety of foods, healthy foods all year now. So we have that ability or opportunity. And, I think that's important for all of us.
Amen to that. Randy, thank you so much for the conversation. Really appreciate all the insights. Hope to do it again sometime.
You bet. Thanks, Dave, and take care.
You can read some of Randy's thoughts on what's happened to farmland values in 2025. It is part of our profile piece about him. Find that in the weekly American Farmland Owner newsletter. It's free, comes out every week, and it's the place where landowners get their news, all in one place. Check it out at AmericanFarmlandOwner.com. Thanks for listening, and if you would, please like and share this podcast so we can keep growing. And thanks for caring about the future of our farm.